Hey traders, TG Watkins here. It is July 6th when I'm recording this. I hope everybody had a good 4th of July weekend and enjoyed the long holiday and the long weekend. So, a couple things I wanted to talk about today is maybe the way we used to think about copper as being the metal with the PhD, if you guys ever heard that before. I'll get into that in a second and how I think that maybe semiconductors could kind of give us a little bit of that insight. But first, I know a lot of people are looking at the market and trying to see if this thing is going to bounce or, we get a move up, or maybe because we're seeing commodities roll over that inflation's done, but then there might still be the recession story. So, I am looking for some bullishness here, but my expectations are tempered mostly because I'm looking at volatility, UVXY, I'm looking at some other things, and when I look at a lot of names, there are some moving up, but the vast majority of them are still having a hard time. So with that being said, copper being the metal, the precious, or the metal with a PhD, was used back in the day to kind of explain how we could use that as an indicator to see how our economic health was. Basically, that if there was a lot of copper in demand, prices would be up, and that would be high demand because buildings are getting built and it's a lot of consumption because of productivity and our economy growing and expanding and stuff like that. Then we kind of look at this and maybe say, well, maybe for the modern era, we could be looking at the semiconductors. And since nowadays just about everything what we have has a chip in it, semiconductor, some sort of something like that. And one way to be looking at that is, well, how does that reflect our consumer demand, using chips and using this as an indicator of demand. So if prices are up and things are going up like that, well, then things are good because, people are buying phones and cameras and electronic devices of any sort, games, scooters. I mean, you name it, so many of our things, if it pretty much plugs into the wall and needs electricity of some sort, it's probably got a chip in it. And so that kind of could be a new indication for how our economy is doing. And well, if we take a look at that and we take a look at the semiconductor ETF, which is, in this case, SMH or SOXX, you can see it has been trending down. I mean, along with most things. But this is one way to look at this and say, that might be an interesting way to kind of gauge the undercurrents of our economic development right now. And what I want to do in relation to the, say, S&P is we have been making, well, I can't even put it at the other side of that. It has just been going down like this for the last few days, even though the market, the S&P, has tried to be holding up. So the S&P has put in a higher low, but the semiconductors continue to move down. So while the market, the S&P, maybe has found some support and might move up, and it might be doing so for, say, technical reasons, from just buyers and sellers and too many people on one side of the trade and sentiment and stuff like that. Maybe we do get a bounce, but I think if we look at the semiconductors as a indicator about our economic productivity and growth and expansion, all that kind of stuff, and consumption, it's telling us a different story. So I think that helps continue with the backdrop that while maybe the market will bounce, we should also still be very aware of what's going on underneath the surface with our economy and how well or not well things are doing. We still are looking at a recession, and basically GDP and all sorts of other economic indicators are contracting, and they're contracting fast. So until we see things really start to turn around, I think we still need to realize that any kind of bounce is really just a bounce and a downtrend. Maybe the bounce can last a while or go fairly far, we don't know, but I think it's still a bounce and a downtrend. So as long as you can kind of keep that in mind of what's going on, then I think you'll be wary and be able to stay on the right side of the market. All right, thanks again, guys, and we'll see you at the next one. Hey, TG here with Simpler Trading. Thanks for watching. If you enjoyed this video, be sure to leave a like or comment below. Also, make sure to subscribe and click that notification bell so you can stay up to date with my market analysis. Or you can join my free newsletter with the link in the description. Good trading, and I'll see you at the next video.